ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's session outlook. It's Tuesday after the Labor Day. Of course, we're looking at the Eurozone and the Euro. Of course, it rose slightly against the dollar on Friday after strong Eurozone data, and the inflation figures that came out were actually supportive. While, of course, the dollar jumped against the yen and the US wages data that suggested that the Federal Reserve could actually still rate interest rates at least 2 more times until the end of the year. However, there is a lot of important data coming out throughout the year and of course throughout the week, which is starting from today. Looking at the American Petroleum Institute weekly crude oil stock change, of course, we're looking at total vehicle sales, inflationary data throughout the week. Of course, the rest of the fundamentals today, we're looking at market manufacturing purchasing managers index for the European Union, and of course continuing tomorrow with the very important data out of both economies, European and American. Starting from the European one, gross domestic product out of the EU, and of course non-monetary policy from the ECB. That would of course be throughout the whole trading day. And of course we're looking at the producer price index, moderate volatility over there. Of course, in the afternoon when the US session starts, we're going to look for the preliminary employment data, the ADP employment change, also looking at the ISM non-manufacturing PMI, and of course the Federal Reserve monetary policy statement, along with the interest rates, which is of course a key data over there. But of course it's highly unlikely that the Federal Reserve could actually raise interest rates tomorrow. The more likelihood is to happen in June. However, the tone which the Federal Reserve would attend that meeting would be in high value to traders and investors. That, of course, is tomorrow. The day after, of course, on Thursday, we have the weekly data, the non-farm productivity unit labor cost, initial and continuing jobless claims, as I mentioned, the weekly job data, and of course factory orders out of the United States, accompanied of course earlier in the session with market PMI composite from the European Union and consumer credit change with mortgage approvals out of the UK. And of course, finally, on Friday, we're going to look at the very important non-farm payrolls data, average hourly earnings, and of course, unemployment rate, with of course accompanied with labor force participation rate, which is of course very important inflationary data for the Fed, along with the consumer credit change. All of that, ladies and gentlemen, of course, will have a very high impact on the decision that the Fed would make next month. Of course, let's have a look for now on the first official trading day for the week. Of course, some of the markets were working yesterday on the Labor Day, except most markets in Europe and Asia. Looking at the euro versus the dollar right now, 1.09, it's hovering around this level for quite some time now. It's steady above the 50 exponential moving average, but of course a break above 1.0950, that could of course trigger the continuation to the upside towards 1.1. Also looking at the British pound against the dollar, it fell slightly as we saw that the US economy continues to strengthen despite some downside direction on the ISM data, and of course looking at the preliminary gross domestic product, which of course suggested that it grew about 0.7% in the first quarter. But of course that's just a preliminary report, so we're going to see the actual data next month. Right now, we're looking at the pound. It's aiming for the 200 exponential at 1.2840, which of course is the first major support area, as it of course failed to stay above the 1.29 towards the 1.3, which of course is further away. So right now we're going to stay on the sidelines. On the other hand, dollar yen, however, is bullish as the dollar continues to strengthen to another 5-week high against the yen, and we're looking at a continuous pattern to the upside from 112. So right now we're looking at targets roughly around 112.50 and of course 113 in the near term. Oil prices were kind of to the downside as the production from United States comes strong. Oil rigs continue to climb, and of course we're looking at nowhere near output cut out of the OPEC. So for now, we're gonna stay on the sidelines as long as the 48, 30 and $48 a barrel level remains intact, as it's a key support area. So from then on, of course, we can target 47.60 and of course 47 at the major. Gold prices continue to slide as from yesterday. I've been following gold prices since it actually managed to make a second peak at 1268.69 after it peaked just slightly over the Asian session at 1271 on the opening, where we, of course we saw a pattern to the downside from a continuation one. We could actually suggest that the downside direction could be more likely to continue towards 1249 and of course 1246, which is the next major support. For now, of course, a confirmation below that area is bearish for gold towards the major support at 1200. But of course, in the mid to long term, gold looks to be steady between the 1200 and 1260. So right now we're gonna stick bearish on gold, bullish on dollar yen, and of course everything else we're gonna stick to the sidelines. But of course, major fundamentals throughout the week, ladies and gentlemen, so I'm gonna keep you up to date, and of course I'm gonna meet you again tomorrow at the same time with the latest updates of the market. So until then, see you then. Bye bye. Thanks for watching.